Hey everybody, this is RC Peck, and this is my training called PeakGold. Thank you so much for being here. As I said before, kind of in the pre-talk, if you have questions, you should have a GoToWebinar control panel that you can ask questions into. One of those sections is called questions, and I'll answer those at the end. So PeakGold, what is it about? What does it mean? What does it mean for you? So there have been 3 times in the last 125 years where we've had something called PeakGold. One of them started in the 30s, one of them started in the 70s, and the third one, you could call that PeakGold 3.0, that started in the year 2000. And all three of those cycles, they have many names. Sometimes I call it the contraction cycle. Actually, I call it the contraction cycle a lot. But one could also call it the PeakGold cycle because it's during these cycles where actually gold does exceptionally well. And the reason I call it PeakGold is during those periods between the 30s, when one started in the 30s, the second one started in the 70s, and the third one started in 2000, there's actually not enough gold to go around. And when you don't have enough gold to go around, that means the price of that thing that everyone wants has to change. Now, we're not in a PeakGold cycle forever. So all of these cycles end, and these cycles last about 18 years. And the PeakGold cycle that we're in right now, which again, I sometimes call it the contraction cycle, we have been in about 16 years. The average length is 18, though please don't anchor to that because these cycles can go 20 or 25 years. I'm just giving you a reference. And the word average, that number, that term can be very dangerous. But know that we are in a PeakGold cycle now, and we have not seen kind of the huge hockey stick event yet. I'm going to talk about why that is and what's coming in front of us. Now, before I jump in, I have to just get clear with everyone really what we're doing on this this training, because sometimes when I listen to trainings, I forget why I'm in that training. And so I just want to start off with why I think people are in this training. If you look at the screen here, this is the best 12 years of gold, starting in really 1999 to the middle of 2011. And gold itself, which is the red line, went up 423% during that 12 years, which pretty phenomenal. That was the best 12 years of gold in a row ever. But the strategy that I have, I call this strategy Eltek Gold. Now, I just use the frame PeakGold to call that this training. So please keep clear, that's just the name of this training. The actual strategy that I designed and built back in the 90s, I call Eltek Gold. And Eltek Gold during that exact same 12 years went up 845%. So about, what is that, 1% less than double of what gold did itself. So I'm going to talk about how that happened. And then if you look at gold during its worst 3 years, which, interesting, the worst 3 years ever in a row happened after the best 12 years in a row, gold fell. Now, peak to trough, gold actually fell from the very high to the very low. Gold fell about 45%. But in this price chart, it fell negative 23%. And Eltek Gold during that horrible 3-year period, that was 2013, 2014, and 2015, Eltek Gold went up about 2%. So I'm going to talk about how this strategy, Eltek Gold, knew to step aside from gold, even though it still had the money earmarked, how it knew to step aside and how it knew to avoid these horrific and really painful and catastrophic, emotionally catastrophic falls. And even though gold only, quote unquote, fell 45%, to sustain these types of falls in your life, I just want you to know it doesn't have to be that way. And so this training is going to talk to you about how to get your life on that blue line there. And then if you look at this price chart here, this is the gold bug index. That's the XAU, if you know anything about precious metal mining. It is the precious metal mining index. That's the red line on the price chart. And that's just from 2008 to just about today. And this was the Eltek Gold, best gold stock ever. So Eltek likes to approach its strategies. I like to approach my strategies to make sure that everyone is able to participate in the strategy itself. And so I'm going to talk about how that actually works in this training. But that blue line, which is a actual individual gold stock, you can see how having a strategy, and in fact, it's the strategy that determines your outcome, It's not really knowing whether something's in a bull market or not. And that's what happens to a lot of people. They may know something's in a bull market, but that's not actually the difference that makes the difference. The difference that makes the difference, I'm going to talk about this more, is the strategy that you use. And some people had the strategy, and that strategy was the red line strategy. And others had the blue line strategy. So I'm going to be talking about that. So our agenda, I want to talk about where we are today in the world of precious metals. I want to talk about why gold and not something else. And that actually may surprise you. Why gold stocks don't matter as much as this one thing. And how to get access to my research, our research. So that's going to be the agenda. And then, of course, if you have questions, I would like to answer those live for you. So look, guys, I'm a certified financial planner and I'm a registered investment advisor. I am not a newsletter editor. I am actually someone who manages people's money for a living and mentor and coach and advise people for a living. Years ago, I started a research department and I started providing that research to people. So maybe someone who did not want me to manage their money, or they did not want me to help them, mentor them one-on-one, or maybe they couldn't afford to have me mentor them one-on-one. They just wanted access to my research. So I built a research department where I provide all of my research to the members of that research. So I have to do an SEC disclaimer because I am a CFP and an RIA. So let me just quickly read this to you guys. The opinions expressed in this training is for general information purposes only and not intended to provide specific advice or recommendations for any individual on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program or training is not guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested in directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek direct advice from a licensed professional directly. Okay, guys, there is a lot of information out there. You turn on the TV, you turn on your blog, you go onto the internet or the internets, whether it's Facebook or LinkedIn or your favorite blogs. There's hundreds and hundreds, maybe thousands. There actually probably are thousands of blogs dedicated to money and investing. And we're hit with people who sound like they really know what's going on. Mark Faber, very well respected. He's on the news outlets a lot. You've got Eric Sprott. He's on the news outlets a lot, cable news, talking about what is and is not happening. And all these people sound like they absolutely know what's going to happen. You have Barry Ritholtz, he is a consummate blogger. He is putting out articles and conversations every day. And he's on the TV, the news, the cable networks almost every day. You got David Rosenberg, who is the same. The point of me showing you all of these people is we get hit with an incredible amount of information. In fact, more information than our brain can handle. And I don't know if you know this or not, but your conscious brain can only handle 7 things at once, plus or minus 2. That means if you're loading up on dozens and dozens and dozens of ticker symbols and you have 3 or 5 or 7 newsletters and you're following 5 or 10 bloggers, you are absolutely overwhelming your conscious brain. And when your conscious brain gets overwhelmed by this information and news and noise, it shuts down. Now, I've spent a lot of my life studying human behavior. In fact, I'm a master practitioner in something called neuro-linguistic programming, or NLP. And look, guys, I used to be on the cable network too, and it was something that came very natural to me. I was able to do it. But the reason I brought this up to you is because I saw kind of the backside, and I saw how producers had to have every 5 minutes completely planned out. And before I went on the news networks, and I've been on all of them, CNBC, both domestic and Asia, NBC, ABC, Bloomberg, Fox Business News. I did my rounds on all of them. And what's interesting is that it helped my revenue. People saw me on TV and they said, hey, this guy must know what he's talking about. And he handles himself really well. Therefore, he must know what the future holds. And I don't. Now, I have my strategies that give me a great leg up and people who buy my research a great leg up, but none of us know. Now, we have our own systems, but ultimately we really don't know. And the reason I stopped going on the cable networks is because I realized I don't think I was actually helping people. Yes, I ended up helping the people who came to me and they ended up hiring me, but most of them just saw me as another talking head, like, yes, utilities is higher. Yes, Home Depot higher. No, Home Depot lower. Like, it's just sound bites. And what I want to do in this conversation with you, I don't want to just give you something interesting. I don't want to just give you sound bites. I want to show you what's important and not what's just interesting. So for those of you who do not know me, I am a CFP. I am a registered investment advisor. I'm part of the Financial Planning Association. I subscribe to ethics.net, which is really what I want you to take from it is I am a fiduciary to my clients. I have to put their best interest above mine and before mine. And newsletter writers do not need to do that. People who run weekend workshops do not need to do that. I actually have to do that by law. This is a picture of me on my wedding day, marrying my wife. That was 11 years ago. And this is a picture of my wife and my two beauties. Now, that is an older picture. My son is now 8.5 and my daughter is now 5, but I love the picture of those two little beauties. So thank you for being here. Thank you for listening. And when you have a question or concern, if something comes up, or if you're confused, just go ahead and type in the question and I will get to it. So let's start with where we are today. First of all, I really would like you to write this down. Your strategy defines your choices, your future, your security, not your assets. There's a lot of confusion out there, and I really want you to get this. Owning gold or owning stocks or owning Microsoft or owning fill in the blank, that's not going to secure your future. It's the strategy that you use. I met a lot of people, or know a lot of people, in the 90s during probably one of the greatest bull markets ever. Technology had an incredible 10-year run, but the overall stock market did too. I met a lot of people who greatly underperformed the stock market because their strategy was bad. So your strategy defines your outcome and your choices and your security and your future, not the asset you own. And yes, I know we're talking about gold, kind of secondary in this, but primarily what we're talking about in this conversation is what is your strategy? Okay, I want to read this to you. Now, this is going to be the last the last slide that I actually read to you. Everything else is going to be more interactive, but this is from the New York Times. 2 years ago, gold bugs ran wild as the price of gold rose nearly 6 times. But since cresting 2 years ago, it has steadily declined, almost by half, putting the gold bugs in flight. The most recent advisory from a leading Wall Street firm suggests that the price will continue to drift downward and may ultimately settle 40% below current levels. The rout says a lot of consumer confidence in the worldwide recovery. The sharply reduced rates of inflation combined with resurgence of other, more economically productive investments such as stocks, real estate, and bank savings have combined to eliminate gold's allure. Although the American economy has reduced its rapid rate of recovery, it's still on a firm expansionary course. The fear that dominated 2 years ago has largely vanished, replaced by a recovery that has turned the gold speculator's dream into a nightmare. Guys, 1976 is when that was written. 1976. Now, I wanted to share this with you because it sounds like it was written last week or last month. Now, here's the interesting thing. 3 days after this article was published, gold started a 3-year 800% rally. I show this to you because the noise is incredible out there, and your conscious brain, your limbic system, will override what is best for you if you don't have a very straightforward strategy to protect and grow your money. So where are we today? We are getting hit with tons of information, more than we've ever been hit with before. Now, here's a price chart of the Japanese 10-year bond. It's the yield on the 10-year Japanese government bond called JGBs. It is negative. So if you give your money to the Japanese government for 10 years, they're going to give you back less money each year for a decade. That is absolutely negative interest rates, even without adjusting for inflation. So a lot of times people say gold is not really, I don't even know what it's worth because it doesn't even pay interest. Well, guess what? Japanese government bonds don't pay an interest rate anymore either. And it's not just the Japanese government. You have the largest country by GDP in Europe Germany. Their 10-year bond, called Bunds, it barely pays you anything. It actually pays you 15 basis points, which is 0.15% a year. Now, inflation in Germany, depending on where you live, what town you live in, what state you live in, or county you live in, runs anywhere between 2 and 5%. So that means you're going to lose between 2 and 5% a year on your purchasing power. So what we have today is a situation where the major governments on the planet, they don't know what to do. They've lowered their interest rates so low that they're either zero or negative. Negative in an absolute form, like literally they're below zero, or they're negative when you adjust for inflation. Now, I live in Silicon Valley, and inflation where I live runs about 5% a year. So even with the U.S. government bond that's running about 1.6% plus or minus, I'm still losing purchasing power on even the U.S. government bond each year. But when I talk to you about where we are today, we're in a situation where literally 30% of the developed world's government bonds are under a negative interest rate policy. This is putting huge downward pressure on baby boomers and people retiring. And 10,000 baby boomers a day are retiring in the United States. And when they do, they are more risk averse to stock markets going up or down. They want something that has less volatility. The problem is that thing that has less volatility is paying them almost nothing. And if you look at the price chart here, this is a 5-year government bond interest rate across the world. These are what 5-year bonds are paying in different countries. The United States is here. I know this is a little blurry. The UK is here. You have Norway here. Over here, you start getting negative. You have Denmark, Sweden, Japan, Finland, France, Austria, Germany, the Netherlands, Switzerland. And if you give your money to the Swiss government for 10 years, it's still going to be negative. We are really, really out of whack. These are uncertain times, and the uncertain times, they started 16 years ago. And what you'll notice is this cycle, whether I call it the contraction cycle or PeakGold cycle, PeakGold cycle always happens in uncertain times. So we've been here before. Now, unfortunately, we have to compare the time we're in now to the 30s and the 40s, the first half of the 40s, and we have to compare it to the late 60s and the 70s. And if you know anything about those periods, there was a lot of uncertainty going on, not just in the United States, but the whole world. Now, look at this. I'm showing you kind of the same information, right? Talking about negative interest rates. And if you look at the gray sections here, that's when the U.S. went into a negative interest rate state, which we were in the 70s. But then in the 80s and the 90s, we were in a positive interest rate state, and gold did nothing. In fact, gold went from about $800 down to $250. So I want you to understand that I don't want you to own gold for the rest of your life. I don't want you to always have 5 to 10% of your money in gold. That is not what's best for your money. The world runs in cycles. You did not want to own gold in the 80s and the 90s. Now, unfortunately, everyone was buying gold at the beginning of the 80s, right? If you have to stand in line for something, it probably, especially if it's an investment, like a condo in Vegas or Phoenix or Florida or gold, it probably means it's too late and we're nearing the end. But I want to show this to you because we are in a negative interest rate policy, have been since 2000, 2001. And it's not just a U.S. thing this time. In the 70s, it was just kind of a U.S. thing. Now we have 3 billion more people. That's China and India online and Southeast Asia. They want gold too. And emerging markets are not doing well. So where we are today, we're in a world of uncertainty, and that uncertainty is getting bigger and bigger, not smaller and smaller. And one of the reasons why you see people like Bernie Sanders and Donald Trump happening in this election is because people are saying, no more. I have enough. I've had enough of the way it is. Now, maybe not you personally, maybe you're in the top couple percent of the population. But if you're, between 95 and 50% of the population, you're saying enough. And the middle class is moving into the lower class. And so people are saying enough. That's why you see a Donald Trump or a Bernie Sanders. Now look, you don't know who Michael Tarnoff is. But one of the things that I hear time and time again from people is really what you teach, RC, really isn't taught anywhere else. And what people realize is they're not actually taught stuff. They're more kind of educated through a sales process. And some of the things that Michael Tarnoff got from working with me was he doesn't need to look at the markets every day or week or month or quarter. And that's what he thought he had to do. Now, look, if you want to look at the markets every day or every minute because you love it and it's passionate and you're growing your money, you're beating the market indices, that's great. But most people aren't. Most people think they have to do that. He changed his lifestyle because he was actually able to figure out how to protect and grow his money. And since he got to research and worked with me, this was back in 2005, he had missed every major crash. It's not just about doing slightly better than everyone else. It's about avoiding those major catastrophic losses, which we're going to talk about. So that's where we are in gold and where we are today. We're in an uncertain period, which we've been before. One was between 1965 and 1980, and the one before that was 1930 to 1945. So we've been in these uncertain periods before. This one will probably last longer because of the manipulation and intervention from the governments, and not just the U.S. government, but all the major governments around the world. Okay, so why gold? Why should you get gold? And I'm going to give you an answer that's slightly different than others. So I do want you to write this down. I want you to write down that gold does not equal safety. Gold does not equal security. Gold does not equal protecting your purchasing power. What gold does is enters a cycle every so often where it's the thing that protects your money best. But once that cycle is done, it stops protecting your money. Just like between 1980 and the year 2000. Gold did not help anybody. What helped people was actually to be out of gold because gold fell from $800 to $250. That is a huge fall of about 70%. So gold does not equal safety. Okay? Now, what does equal safety is knowing what cycle we're in, knowing when it started, knowing where we are in it, and knowing when it has ended and when it is ending. That's what helps you. It's the strategy behind owning gold. Now, most people say to you, gold does provide security and safety. And they talk about the properties of gold. They talk about how it's durable and how it's consistent and how it's divisible and how it's an exchange mechanism. And these things are all true, and there's zero liability and counterparty risk, and you can get it in euros and yuans and yens and dollars. And so it's priced in all the currencies around the world. And I get that, like over the millennium, like if your ancestors probably had some sort of form of wealth around their neck, and it was probably gold, right? So they could travel and move, and if they moved to a new area, they could have some gold, and it was durable and consistent and divisible, and you could exchange it for a house or food or clothing or land. But those are the properties of gold. That's not why gold can protect you. The reason gold can protect you now is because it's going higher. And it's not always going higher, because there's long periods of time where it doesn't go higher. And so that's one of the things I really want you to get. Why gold? Because it's in that cycle right now, that cycle of uncertainty, that contraction cycle that I talked about or mentioned a couple times, that peak gold cycle. That's why gold, because we're in that cycle right now. And look at this right here. Look at the cycle. This is a price chart of gold going back 115 years, and it's adjusted for inflation. So this helps us understand purchasing power. And you can see that gold goes up, and then it goes down, and then it goes up. And those are the cycles that I've talked to you about. That's like the peak gold cycle, what I just showed you. Yeah? But do you notice something else here? After the peak gold cycle finishes, it falls. It falls, and it will fall again. That's why it's so important that you understand that it's not if you own gold, you're safe, or if you just have 5 to 10% of your money in gold, you're safe. That's actually not true, even though people often believe that. And if they just were to look at this chart, then they'd immediately get, oh my gosh, gold doesn't always help you unless you're in one of those cycles, which we're in today. So this is the cycle that we have. Gold has a relationship between stocks. And it's a very, very long relationship. Here in the U.S., it's about 150 years. If we were in Britain, we'd have charts going back 300 years. And it'd be a 300-year relationship. But think of the relationship between gold and stocks as kind of a track. And the average length of any track, at least in this country, is a 400-meter, distance. And think of this, the runner who has the baton, call it the stock runner or the gold runner, that's where you want your money. Now it happens, we're in a cycle where the gold runner has the baton. And so you want to be, you want to have your money with the gold runner. And because that's the cycle. Now, the gold runner is not going to run 400 meters. He's going to run on average about 18 years to get around the track. That's an average number. The longest has been 22 years. The shortest, there was one that only lasted 12 years. But on average, they're about 18 years. So there's a cycle where, there's periods of times where stocks do really well. And if you've been paying attention over the last 16 years, you know that stocks, yes, they're positive. But if you adjust for inflation, you clearly see that they're not positive. And gold has crushed them, which I'll show you in a little bit. So look at this cycle here. I just want to show you this chart here, and there's 4 columns on this chart. And I'm kind of putting this back and forth in, but you have the calendar years here, right? So let's just do 1930 to 1947. Gold did really well, 244%, and the stocks over that 17-year period fell 30%. But hey, the baton went from gold and it handed to stocks. So between 1947 to 1965, stocks did really well. They went up 500%, not bad. And during that time period, gold fell 18%. And then the baton got handed to gold, and then the baton got handed to stocks, and then the baton got handed to gold. Now, yes, stocks are positive, but gold over the same time period is more than 3 times better, has helped people's money grow, be protected, have a more secure future, 3.5 times better. And so this is the cycle that we're talking about, these long-term economic cycles. And this is the same information, but I just put on a price chart for you. So, sometimes the stock market goes up, you want to be in the stock market, and then it cycles down, which you want to be in gold and a couple other assets. And then the market cycles up, the stock market cycles up, and then it markets sideways or down. If we adjust for inflation, you would see it down. And then it cycles up, and then it cycles down. Again, if we adjusted for inflation, you'd see that it cycles down. So we're just moving between 2 different cycles. That's why I beat the drums or I pound the tables that it's the strategy that matters most. Now, I want to zoom in on the last time we went through a full kind of peak gold cycle or contraction cycle. This was between 65 and 80, 82. And if I zoom in, which I did right here, this is what the Dow Jones did during that entire time period. It could not get above 1,000 between 1965 to 1982. Couldn't do it. It attempted about 18 to 20 times and could not get above it. Now, even if you did not live through this, or even if you had a pension and you weren't paying attention to the stock market, this is a picture of uncertainty. If you want to know what uncertainty looks like, that's what it looks like. The stock market did not know what to do. There was a lot of manipulation coming in from the central banks around the world. Now, back then, it was fewer central banks. There was no Chinese central bank. But what you had was a level of uncertainty where people's money did not grow, especially if you adjusted for inflation. But during the exact same time period, this is what gold did. Gold went from about $35 and it went up to about $850 and then settled back down. Now, I believe we're here today because in 2013 and 2014 and 2015, we had this very scary correction, which was scary more in the length than the distance it felt. Look, falling 45% is difficult, but the fact that it took 3 years, I think, was even more difficult. And there was a correction in the 70s, and the correction was actually a 50% correction, but it only lasted about 14 months. So the long-term trauma to the human brain wasn't as bad as it was in 13, 14, and 15. But that's where we are today. But like I said, the strategy has to tell you, if you get into this dip, is that dip the end or is that just a dip? Is this dip the end or is that just a dip? And the strategy, a strategy you follow, or the Eltek Gold strategy, that's the difference that's going to make a difference for you, right? I mean, of course it is. That is the difference. So this is the same chart, and I want to show you where we are today because we're in that contraction cycle again where the stock market is going sideways and the gold market is going higher. So if you look at this screen here, This is Eltek Gold in blue, and you have the S&P 500 in red. And during the same time period, yes, the S&P is positive, up about 90%. Yeah? And you have gold, or Eltek Gold in this specific situation, up about 452%, even with this visually horrible fall. But now here's something that is interesting with Eltek Gold. During Eltek Gold, or the Eltek Gold strategy, got people out so they did not sustain this loss. So when they finally got back in, and they are back in, it's almost like they got back in here, but when they got back in, gold was 25% cheaper. Precious metal mining shares were 60% cheaper. Small cap precious metal mining stocks, though they fell a total of 90%, were still 75% cheaper. Those dollars are going so much farther, and that's the Eltek Gold strategy, right? Because it knows when to get in, it knows when to get out, it knows when something is ending or when something is a correction. So this is the most recent cycle that we're in. This is live. Meaning we're still in that uncertainty cycle, that PeakGold cycle. So here are some scenarios. I know people like to speculate, but there's a couple reasons why I have these scenarios. So first, look, the NASDAQ from 90 to 2000 went up 13x. Now, if gold went up 13x, and gold, let's say, started about $250, which it did back in 2000, that means gold would go up to about $3,250. Yeah, the Dow Jones between 1982 and 2000 went up about 18x. Now, if gold went up 18x, we'd have about $4,500 gold. Or if we did what gold did between 1971 and 1980, gold went up 24x, we'd have about $6,000 gold. Now, I show you these numbers for a couple reasons. One, as I talked to before when I pointed out Mark Faber and Eric Sprott and Barry Ritholtz and David Rosenberg and even myself, we don't know. We don't know what's going to happen. We don't know how high things are going to go. No one in 1980 was saying, or in 1982 was saying the Dow Jones is going to go to 18,000. You know how I knew? Because I looked at all the articles in the Wall Street Journal and the New York Times. I looked and I searched. I said, who said this? Who pointed out? Who said we're entering into this cycle? No one knew that information back then. It wasn't known. These cycles weren't really known yet. Well, they were known to a few people. A very few people who did exceptionally well for themselves. Jim Rogers, George Soros, they knew about cycles. So I want to point these out to you because we don't know what gold can do. It could go to 3,000 or 4,000 or 6,000 or 10,000. And I know these numbers might sound ridiculous to some people, either on this training or outside this training. And I don't mean to sound ridiculous to them. I'm simply saying we have no idea. And an ounce of gold doesn't change. Now, what does change that is how much people are willing to pay for that ounce of gold. And we know from history there have been 2 times in history, the last 2 peak gold cycles, we're in the third one now, where governments manipulated gold. They did in the 70s by keeping it fixed at $35, and the world was demanding it to be higher and higher. And finally, when they released it, when Nixon released the peg to the dollar to gold, it skyrocketed higher, but not in a straight line. And the same thing happened in 1933. Gold went from $23 to $35 overnight, and then the government held it fixed at $35. But it didn't just hold its purchasing power because there's inflation. And silver did move higher, absolutely. Silver was never confiscated from U.S. citizens, and gold will never be confiscated again. There's too many wealthy people who own it today. It would be something that would never happen. There's too much movement around the world. We are too globalized. The point is that we have a big move still in front of us. Whether gold's at 1,200 or 1,300 or more or less, we have a big move in front of us, and it's not going to be a nice 45-degree angle going up and to the right. It's going to be done in a way that brings along the least amount of people. Now, I want you to listen to this conversation. I met Richard Green, I think about 2003. And the reason I recorded this when I talked to him is because it reminds me of so many people that I work with that have so much hesitancy that aren't necessarily cynics. Cynics do not buy my research. They do not hire me. They do not ask me to come into their world and help them. But what I notice is skeptical people do. what I notice is people that have been hurt, they do ask for help, and they usually are hesitant when they ask for help. Now, Richard himself, he did not have 3 to 5 newsletters that he was buying and getting inundated with, but there was a skepticalness in him and kind of a gun shyness. And I just want, a lot of people see themselves in that. And one of the things that I pride myself on, and my clients will say when they invite me into their lives, is how it feels very different. And when they recognize is they've never had this type of research or connection where they're really understanding it for the first time. And these are people who have been in the market for decades, or maybe only for a couple of years.
I just now remember this. The night before the workshop started, way back then, I did them on Saturdays. I spread them out over 3
That's right.
between each day. You called me at like 8 o'clock at night, basically saying, "I'm not going to do it." You're like, "RC, I don't think I should do this. The timing's not right." It was something like that, and I basically said, "Richard, just show up. And if you don't like the first day, you will have lost one day of your life. I don't think that will happen. But just, and I might even said, just show up for the morning, and if we get to lunch and you think it's a complete mistake, I will hand you your money back." Do you remember that?
You know what? Now you mention it, it vaguely rings a bell. But I don't. I did that. I can remember not wanting to
do it.
Spend the time. Well, just because it was another thing. So I was jaded. So just to give you a little background on Richard Green, I've been involved in the tech industry for about 25 years. And I've been on the executive management team of 8 startups, of which we sold 6. So, I live in a great house, I earn a great income, I have a fabulous family, I have great goals for my life as well as affirmations for life, wife, family, and my community. I'm blessed with great fitness and health. I struggle with the most with figuring out how to become independently wealthy. And my experience had always been with sort of big-name brokerage houses who would happily put me in stocks and shares and bonds and asset allocate. When the market went down, my money went down. And they'd say to me, well, it didn't go down as much as everybody else. And I just kind of didn't understand that. So I realized their motivation was to take a percentage of me, but it wasn't aligned with my success. So when I met RC, I realized I was generating a great income, but I didn't have the skills or the emotional maturity to manage wealth. So what RC did for me, which is just what he can do for everybody else, and it's just been a life changer, is figure out what I had been doing with money, which was losing it. Take control of the budget, which we didn't have, got aligned with my family, which we weren't, and put us on a strategy which would take the emotion out of the process and just allowed us to execute. It was less stress, it was less worry, it was less time spent looking at the day-to-day. So my recommendation is if you are as serious about being as successful with wealth management as you are in the rest of your life, you need to spend some time with RC.
Thanks, guys, for listening to that. I oftentimes find that hearing what other people are going through, what they're doing, it allows you to be like, oh, I'm not alone. That's actually what's happening with me. And the one thing that Richard had said to me before, he goes, look, he said, look, I just want to know what really works, but I want to be able to just simply plug into something so I'm not on my own and trying to figure it out. And he did have the big box advisors, and he said, look, that's not the way. Now, most of the people who go to my trainings, maybe they still have a big box advisor because they don't know how to cut or the tether, the rope between them. But they're also kind of doing it themselves, the DIY, and that has its own downfalls too. So, how did Richard do it? He aligned his money to the market, which is one of my key principles in investing. This will never change. Align your money to the market, not your own financial beliefs or financial religion. And invest in a strategy and not a stock or not an asset. Get the strategy. Get a strategy that understands cycles, that understands human behavior, that knows that things don't go straight to the heavens. But invest in that strategy and just keep it straightforward, guys. I get it. Most people on these trainings have 3 to 5 newsletters. And you know what? They don't even know what they own anymore because all those newsletters come with free daily newsletters, and they're talking about stock picks, and then the newsletters have stock picks, and the stories are really well written, and they're super interesting, and the people don't know what to do. And then their limbic system, because the conscious brain can only handle 7 things at once, plus or minus 2, it shuts down and they do nothing. So don't be that person. Okay, now, why gold stocks don't matter as much as this? Super important. Guys, please write this down. Probability, not diversification. We get hit by everyone who believes that diversification is the thing that is going to set you free. And I literally mean everyone. Big box advisors tout their diversification. Independent advisors tout their diversification prowess. Boutique advisors talk about how good they are at diversifying. Okay, then you have the pick of the month newsletter industry and editors, and they talk about how you got to be diversified. You got to have different stocks and different portfolios and different ETFs and different ticker symbols. They talk about diversification. Now, this is interesting because they rail against the big box, boutique, and independent advisors, but they say diversification along with the other one. So people don't think diversification is actually bad. And all the DIY, do-it-yourself bloggers and advisors and services, they all talk about diversification. Even the robo-advisors. I was just looking at one of the main robo-advisors to come out of Silicon Valley. In fact, they are in the same town I live in. They're about 1 mile from my house. And literally on the front page in huge letters, they talk about low fees and a proprietary diversification model. People, if the service you're subscribing to or the advisor you're hiring talks about their fees being low, you're in trouble. Of course you want your fees to be appropriate, but what you want most is performance and not risky, stupid, dumb, hourly trading, option swaps, doji. No, I don't mean performance as doing crazy things. I mean, your focus should be on growing your money effectively. And this idea of diversification has been hit over the head by everyone, including, which is so interesting, entities, companies coming out of Silicon Valley, which, Silicon Valley's I almost call it a company, the entity that has upended every industry. Hotels are going to be upended by Airbnb. Of course, the taxi industry has already been upended by Lyft and Uber. All retail stores by Amazon. Just to name 3 that hit my brain. They're upending everything, but they don't even get that it's not diversification. It's not about low fees. It's about the strategy. Please write that down. It's probability, not diversification. I'll talk about what I mean by probability. So conventional diversification is, and we're talking about gold here, you get some producers and get some developers and get some exploration stocks and get some silver and some mid-tier producers and get some gold too and some royalty stocks and maybe get some currencies like maybe the Canadian or the Australian dollars because those currencies will help and maybe get some small cap miners too. But be diversified. But that is garbage. It is garbage. Because if your diversified portfolio hits an iceberg, it all crashes. And I want you to look at this screen here. This is gold from 2000 to 2016. And this red column here is when Eltek Gold stepped aside and said, look, the probability has changed of growing your money in the precious metal market. Step aside, right? It's probability, not diversification. All those diversified portfolios got hit. Yes, maybe gold got hit the least and small cap precious mining stocks got hit the most, but they all fell. It's not about diversification, it's about probability. So I want to zoom in on this red circle here. So if you look here, I'm showing you gold in blue, and in red is silver, in green is precious metal mining, the large cap, and in yellow, maybe you can call that gold, is small cap precious metal mining. Notice diversification did not help. If you had a precious metal newsletter, which they can run, depending on what types you buy, they can run anywhere between $2,000 to $5,000. And they did not help you because you have this silent agreement with newsletter companies to say, I will pay you and you keep telling me great stories and give me ticker symbols to buy. And yes, your newsletter may outperform an asset class that fell 70% and yours only fell 60%, but I don't know anyone who is cheering that their portfolio only fell 60%. It's not diversification, it's probability. And if you look at this price chart here, the red line here is gold, and you've seen this before. It's the worst 3-year period for gold ever. This was 13, 14, and 15, 2013, 2014, and 2015. And I showed you this at the beginning. This is why people are on this training, to say, look, I don't want to have that ever happen to me. Yeah, and Eltek Gold went up about 2%, while gold during the exact same time period went down 23%. But of course, it fell 45%, and precious metal mining stocks fell anywhere between 70 to 90%. So it's probability, not diversification. And Eltek Gold gets that. It gets that it's probability. It understands that. And then this year we went back into what I call green light mode, and Eltek Gold did really well. Now gold went up 3%, and that's awesome, but during the exact same time period, Eltek Gold went up 13%. The point is Eltek Gold works both when the market is correcting or falling or going into a cyclical bear market, not a secular. Secular means long term, so you can have cyclical bear markets within a secular bull market, and so it even works when the market is going up. And when I worked with Alan and Liz, they told me, they said, I had all these newsletters because I thought that's what I had to do. I got that the big box advisors were not going to help me. But what I did not realize was happening was I got into my own brain. My lesser self took over. I did the do-it-yourself. I got into the trading. I got into it, and it made things worse. And that's why people who buy newsletters and invest their own money, there's a long 40-year history that they greatly underperform the stock market by 312.5%, meaning if the market goes up 10%, their account only goes up 3.125%. They're greatly underperforming the market. And so now analysts, they just observe the markets, their returns increased 100%. It's not because they were doing everything they could do. It's they're doing just what they need to do. And the reason the stock market drops no longer concern them is because they're focusing growing their money on probability and not diversification. Please, if you get nothing else from this hour, write down diversification will not help you. Okay, please write this down. Align your money to the market and not your beliefs. Now, I'm sure I've said this. I have said this before, especially I think even Richard Green mentioned it, or I mentioned it, that what happens is people align their money to their what I call their financial religion, right? Their financial religion. Say, oh, no, I'm a gold bug. I'm in. I keep 10% of my money in gold at always. That's the right thing to do. Why? Based on history? It's actually not true. But people are so glued to their financial beliefs. And I'm not making fun of people who have that. I'm simply pointing out that that's not what's best for their money. And I've found that financial beliefs often hurt people. And if they just notice and recognize what are their financial beliefs, then they'll start to get, oh my gosh, my financial beliefs are actually hurting me. And I shouldn't align my money to my financial beliefs. I actually should align my money to the market. So if the market is going up, whether I believe in stocks or not, whether I'm 65 years old or 35 years old, if we're in one of those cycles where stocks are going to beat everything, I'm going to align my money to the market and not necessarily my age or my self-described risk tolerance. So please write that down. Now, with the Eltek Gold strategy, I think what most people are searching for, this idea of security and freedom. I think they're searching for really never running out of money, knowing that it's going to be okay. I've worked with a lot of women over the age of 50 who have always been single or are divorced. And one of the things they've said to me is, RC, I don't want to be on the streets. I don't want to be a bag lady. I've talked to men who are divorced in their 50s and 60s, and they don't say the same thing, but they say, I don't want to be out. I don't want to be homeless. I want to know that I will have enough money. So at the core of what this strategy, the Eltek Gold strategy, is about is knowing that it's going to work out, is knowing that your lifespan will not outlive your wealth span. You will have enough. You will never run out. That's what this strategy is about. It's securing those choices and the freedom for the future. And there are a few that jump on the blue line, right? They get their lives going, kind of looking more at the probability and not the diversification. And they've kind of stepped back and they've recognized what is not working. They've recognized that they don't need to be risky. They don't need to take risky actions and dangerous things. And unfortunately, I see this all the time with people in their 50s and their 60s and their 70s. They say, look, the last 16 years have been really painful. I've now run out of runway, or I've run out of my earnings runway, and I don't have 15 years in front of me to earn. I have no more years to earn because I'm retired. I only have 3 more years to earn. And so then they start doing very risky things with their portfolio. And that's a very dangerous thing. Or they say, okay, I'm going to go get all these services that tell me what to do. And then they kind of go down the rabbit hole and they start watching their screens way too much. Not because they want to, but because they think they have to. And there's some people who think they want to, but when you offer them an alternative choice to having great results, they go, actually, I don't really want to be looking at the stock charts every day or reading newsletters every day. I thought that's what I needed to, but what I really want to do is hang out with my kids or my grandkids or my friends, or go learn how to, run a ultra marathon. Their attention completely changes. Because what happens is when people take things on themselves, they can be super focused for a while. All right, they get the newsletter, they read it, they're like, okay, I'll get that. But then something comes up, either their job or their marriage or their kids or their health or the weather, or literally something, or their attention wanes. And then their portfolio, right? This is their portfolio, the guy in the middle. They kind of forget about it. Or maybe they had a bad week or a bad day or a bad month in the market and they just don't want to look at it. And then weeks go by or months go by or quarters go by and they stop paying attention to it because it's just too dangerous. Because the approach they're using is just too complicated. Complication is the death knell to growth. The Eltek strategy is incredibly straightforward. In fact, it's so straightforward that I do not hide it behind walls. I say, look, I'm going to actually show you how it works. And once you see how it works, it is super straightforward. And now what Eltek Gold has given my clients, they know they're not going to run out of money. They see the cycles. They know they're going to have enough. They know they got control back over their future. And I've met a lot of people who have really felt like control has been taken away from them. They don't have the control over their future like they used to. And a lot of people say they don't want to be a burden on their kids. They don't want to be a burden on their kids. And the question I often ask people is, your advisor or your newsletter making you safer? Not making you feel good, not giving you interesting stories to read, but are you actually safer? Is your future actually safer? And the peer-reviewed results are very clear. The answer comes back no. People feel like they're almost going to just about, but they're not actually getting safer. And so I built that strategy called Eltek Gold, or Long-Term Economic Cycles Gold. I built that, and I built in a way that so literally I could hand it to someone and say, here it is, let me show you how it works so you understand it. Because when people understand how something works, it becomes part of them and part of their behavior. Like they get that there's a cycle between stocks and gold. They get that it's going to continue to be that way. That cycle, by the way, is based and sits on top of hundreds of millions of people's mass psychology. It's based on handing that baton back and forth and knowing which cycle we're in. Notice this is not day trading. This is getting the big picture right, knowing which cycle you're in. And like I told you in 2013, 2014, and 2015, the buy and hold gold crowd, they lost over those 3 years. They lost almost 37%. And during those 3 years, Eltek Gold lost too, but it only lost 4%, a little over 4%. Now that's a difference of it's a difference of 32.5%, almost 33% of not losing that. That is a significant number that people say they want to have. That is the difference that makes a difference for their lives. And I've shown you this chart before when we're in the cycle, the PeakGold cycle. But then after the cycle ends, which I also call it the uncertainty cycle, then we go into something completely different. Well, then what are you going to do with your Peak Gold newsletter? Sorry, what are you going to do with your gold newsletter, your precious metal newsletter? Well, most people will continue buying it, right? But they'll be losing out to something better. And I think that's a mistake. People often think it's the asset or the stock they own, but actually that's not true. And if you just notice, it's the strategy that determines your outcome and your future and your security. Then you'll start to get that the strategy matters most and not the asset, right? Is it stocks? Should you be in stocks the next 18 years? Should you be in bonds the next 18 years? Should you be in physical? If you are in physical, which physical? Is it gold? Is it real estate? Is it commodities? If you are going to be in bonds, is it long-term U.S. government bonds, municipal bonds, corporate debt? What is it? Or is it currencies? Yes, you need to know the asset. Of course you need to know the asset. That trumps the ticker symbol. But what's most important is knowing when you're in the one. Which one should you be in? And this Eltek Gold tells you when to switch. So I want to be really clear about this. This strategy is much more than just gold. It is telling you when it's going to end and when it's going to move to, say, something else. And I call it Eltek Gold or Peak Gold because when we're in that cycle, when the one runner, the gold cycle, gold outruns stocks. I really want you to get that. So I literally built a checklist and I used to sell it for $1,000. Like literally, here's the checklist of Peak Gold, of Eltek Gold. This is exactly what you need to do. And it's super straightforward. And you can just take it and you can implement it. I gave them all the support research for it. I told them, look, I'll just tell you what to buy too, so you don't have to figure it out. I'll tell you what to buy. But they were figuring it out on their own. I was helping them. And so I was doing it for them. And then I gave them live monthly support, which actually was $1,000 a year service. I gave that to them, and I gave them all these training videos to support what I call Eltek Gold. And this is different for people. Most people in the world of investing, they either have kind of that big box, boutique, or independent advisor, right? They have someone doing it. And then they step over into the do-it-yourself. And the do-it-yourself world, the majority of the do-it-yourself world is the pick of the week, pick of the month newsletters. And I don't think those are what's best, because if you're paying someone to give you advice once a month, even if it's not what's best for you, they have to give you something to buy or sell. And that's not what's best for you. So I wanted to say, well, look, why don't I just teach people the strategy? And so that's one of the things that I did for years. I taught people the strategy. And when people literally bought the strategy for me in the training videos and the Q&A at the $1,000 a year, they bought that for $5,000, and then another $1,000 a year, I gave them the monthly support. I let them ask me questions live, right? What precious metals do I buy, RC? What mining shares should I buy? What leverage position should I buy? Should I be in leverage position? Should I be in small cap mining, large cap mining? Should I be in silver or gold? Should I be in bullion? Or should I be in numismatic stocks? Hey, I have a loss on my metal. Is there a way to take a capital loss on that? Is it different from stocks? Or can I actually take a capital loss and not have a 30-day wash rule? I go over these things. This is what the strategy is about. And one thing that people don't have is actually when to sell. When do you sell? And so I give people want the monthly calls. They don't want to be in isolation and do it on their own. They want to know what's working now. They want to have what I call a 30-day forecast, where I look at the price charts and I tell them, this is what's happening today. I give them something called speed investing, where they bring their ticker symbol to me, and live I deconstruct it. I show them what's working and what's not working with that. So if there's a symbol that they like, I can deconstruct it right there live with the price charts. These are monthly calls that people get. They get the live Q&A. They get to personally ask questions. And I review the strategy. Because it's you have to have that connection. Humans need that dialogue. Being a monologue is very dangerous. One of the worst things that one can ever do to a human is put them in isolation. That's why in all the prisons, the worst thing that can ever happen to you is you're put into isolation. So never be alone. Now here's the thing, guys. I've been at this for 18 years. I love doing this. This service used to sell for $5,000 down, and then it was $1,000 a year. And it was eliminating a lot of people. And so I wanted to make a difference, and I wanted to change the price. And I have 3 parts to my business. I have a research department. I have people come to me and say, will you please mentor and coach me so I can figure this out, get my money. I have to live with money. I have to live with investing. Help me figure it out. And then I have a division where I manage people's money. And so I want to make my research accessible. So I'm doing something kind of fun here. And for the next 24 hours, if you buy Eltek Gold, you can have it for that $9.97. And I know right now there are newsletters that charge $2,000 to $5,000 a year. And I've looked at them, I've researched them, and they were all telling people to buy gold in 2013, 2014, and 2015. And even though they are more money and more expensive and give you great stories to read, they don't outperform Eltek Gold. And so I want to offer you this for $997, this price for the next 24 hours. And I'll tell you where you can go in a second. But I just want to be clear, you get immediate access to what to buy now. You get instant access to the entire Eltek strategy, that Eltek Gold strategy. You get the support training videos. You get those. You get the monthly conversations with me. It's about never being alone. And I want you to try everything. Now, here's what's different about my research. I give you access to everything. This is not a newsletter where I drip feed a different story each month and you're waiting for the next story. I give you access to everything immediately. You cannot unsee what you get. And so I want to be fair to both of us. And so I'll take most of the risk. You can take 1 unit of risk, and I'll take the other 9 units. So this service, this access to my research comes with, a policy where I'm going to refund 90% of your money if you don't like it, because you get access to everything immediately. So you will get 90% of your money back if you do not like it. I'm going to take the majority of the risk here because I'm going to let you know when to be in. I'm going to let you know when to be out. I'm going to let you know what to own. I'm going to let you know what to avoid. This is not about doing as much as you can. It's very little activity while really greatly accelerating your money. And look, if you don't like the service, I get it. I'll return 90% of your money in that first 30 days. I want to be fair to both of us. And that is something that I think is more than fair. And to get full access to all the research, I'm going to talk about what that means in a second, for $997 a year. Now, here's something, and I want you to get this. Details matter. Knowing to be out in 2013, 2014, and 2015, of course that was worth way more than $997 those years. Okay, but it's in the details that matter. It's the small things that make the big things happen, right? It's the small shifts that make the big changes happen in people's lives. Details matter. Details matter, knowing the probability of whether you should be in or out of the gold market. It's not what you own, but it's when you own it. It's the probability of owning it. And yes, I talk about tax implications. I talk about how you can put off taxes, put off capital gains. I've gone into this. I've been at this almost 2 decades. It's been almost my entire adult life, helping people, showing people what really works. But I actually want this to be a little bit juicier for you, right? It's not just about being on the blue line and having Eltek Gold. Though if that's all it was, that would be a phenomenal investment of that $1,000 a year, okay? It's not just knowing what the best gold stock ever is. Though if it was just that, it would have made a difference for a lot of people. In fact, it would have been the difference that makes a difference for them. It's not just avoiding those 3 years and having almost a plus 2%. And when you got back into the market, your money bought you gold at a 25% discount, bought you precious metal mining shares at a 70% discount, bought you small cap precious metal mining shares at an 80% discount. It's about having a life with security and freedom. It's about being on the blue line, knowing that people on the blue line, or their money who's on the blue line, their life has more security, their life has more freedom. But here's something crazy I want to do. And this is literally only for 24 hours. I've been talking to you about Eltek Gold. I have another strategy called Eltek Bond. I want you to have access to it, right? Because remember when I said to you when the runners were handing the baton back and forth to each other? Well, it turns out during the contraction cycle, which in this training I call PeakGold cycle, long-term U.S. government bonds also crush stocks. I have another strategy called market probability. This just has to do with the stock market, whether you should be in or out of the stock market. And this is not trading. This is not being in and out every week, month, or quarter, or even every year. It's knowing the probability of whether your money is treated best in the stock market. I have another strategy called deep value real estate. Now, I used to do weekend courses for deep value real estate, and people would pay $5,000, and I'd show them how to buy a property. And guys, I started that in 2002. And all the people who bought property up until 2006, because I stopped teaching in 2006, they never got hurt in real estate. It never hurt them. I give you access to that strategy. And there's an entire library of all the research that I've done over the last almost 20 years that I want you to have access to. This is about having access to all of my research with this offer today. You don't need to go and use all of it. I'm not saying you should. I'm simply saying, let me just give you access to all of my research for the next 24 hours, meaning I'll have the offer up for the next 24 hours. And then I will also give you that monthly support. What should you buy? I'll give you office hours. I'll give you a 30-day forecast. I'll give you that speed investing. You'll get the alerts so you'll know what to do. To make this so accessible to people that the investment's like, well, of course I'll do that. And that's what I want to do. And so if you go to PeakGold.org, now if you go to PeakGold.org, and I'm going to describe this in a minute, there's just an order form right there. So all there is an order form at PeakGold.org. And the offer is to get all of this research and be able to connect with me monthly for $997 a year. Now, this is the Eltek bond strategy, which is the blue line, being compared against the S&P 500. I can go and just sell the Eltek bond strategy on its own, and that's worth $1,000 a year, right? Here's market probability, MPX1, being compared to the S&P 500 during the 2008 financial crisis. MPX1 went up it did actually go up 0.4%, while the S&P during the same time period fell 25%. I want you to have access to that strategy. You don't need to use it right now. You don't need to ever look at it. I simply want you to have this information because it's not about more newsletters. It's not about more ticker symbols. And then during the 2000 crash, market probability went up a little over 11% when the S&P fell 32% during the same time period. That's the market probability strategy. I mentioned the MPX2 market probability 2x strategy. That went up 231% between 2009 to 2014. During the same time period, the S&P went up a little over 100%. This is about knowing the probability of where your money should be, or knowing the probability of whether your money should be in. It's about knowing where your money should be aligned. It's about the strategy and not the ticker symbol or the asset. And I want you to have access to that. And you can have access to that by going to peakgold.org. You have that. You get access to all of those. And lastly, I think this is actually the coolest thing I can actually do. As I told you before, I have 3 divisions of my company. I've been helping people. People have been inviting me into their lives for 2 decades to either mentor and coach them with their money, not just their investing, but all areas of their money, how to earn it better, how to save it better, how to get along with their spouse better, be on the same page, and how to grow it, and also manage it. Sometimes people just say, RC, will you just manage it for me? But here's my promise to you. When you buy at this level today, this next 24 hours for this $997, I will never upsell you any research. If I come out with a new research product, if I come out with new research, whether it's about options or something else, you get access to it. I will never upsell you any other research information. I promise you'll never be upsold any of my research. You'll get access to all of my new research, updates, changes while you're a paid up member of my research. The only thing people pay more for is my personal time. So a lot of times people say, look, RC, I need a second opinion. I want a second opinion. I need a strategy call with you. I need you to look at what I'm doing. Something's not working. That's my personal time. That is a different price, right? And sometimes people come to me and say, can you just do this for me? Could you just please set it up and implement it for me? Please do it for me. That's different. But as far as my research goes, you'll never be upsold. You'll never be upsold. And I'm super proud of this because there's so much upselling out there where you come in at even $1,000 and you get upsold 10 other services, whether they're newsletters or other things. It's just like, it's insane. And it's part of the noise. Part of the reason why I left the cable on TV being, a talking head on cable is because I was just creating noise. And I wanted to stop that. You get no upsells when you go to PeakGold.org. And this is the order form you're going to see at PeakGold.org. If you go there, when you go there, it's a standard order form. You put in your contact information, your billing details, and your payment information below. All right? It's super straightforward. I'll keep this live for 24 hours, then I'll take it down. Now, after you buy that, I offer you a strategy review session with me. You'll get it, and I want you to, you'll get this after you go through the order form, and you hit click or pay or buy. You'll get this landing page where I say, hey, do you want a second opinion? Would you like me to implement this strategy? Would you like me to take a look at what you're doing? Get some time with me. Just this one time, it is literally a one-time offer because I offer it at a very, very, very fair price. This is not a business model of mine. I do not work by the hour. I work by the results. I get results. My clients come to me and stay with me because of the results they get in their life. But that would be that. And when you say yes to that, of course, you'd have to start at the peakgold.org. Then you're going to get, you'll order that, and then you get what I call a portfolio x-ray strategy session questionnaire, where I ask you about 5 minutes of questions. So when we do get on that strategy session, when we do get on it, we can really be focused, both you and I be focused on where is the biggest gap in your financial life? Where is it? What is hurting you the most? And it might be a blind spot of yours. Whether you're 60 or 70 or 40, we all have blind spots. We all have behavioral and emotional blind spots. And to have someone else look and go, oh, here's the biggest gap in your money and your investing. That happens at every meeting. So that alone changes people's lives. And actually, I hear it. In fact, RC, I love your service. The rate is super fair. But it was that time I got on the phone with you and you helped me, and I chose to have you help me or not help you. That was one of the differences that made a difference. Look for the biggest gap between where you are and where you want to be. That will be the questionnaire. And then you will schedule a meeting with Patty, my ops manager, and then we'll get on the phone. So peakgold.org is the place you can go. I'm going to keep that price for 24 hours where there will never be any upsells for any of my research. I give you my word. I will give you access to all of my strategies. There's not 100 of them. There are 3. Well, I guess if you count real estate. I give you access to all of my library. I used to sell them all independently, and I did the upsell thing where you bought one, and I said, well, what about this, and then what about this? And look, it was worth it. Each one, if you paid $1,000 a year for each strategy, there's 3 stock market strategies. There's a real estate strategy. Even if you'd done that, it would have been completely worth it. But what I'm saying is when you buy through me, and you buy through that offer that I'm offering you for 24 hours, do it today. You get it at that $997 rate. Thank you, guys. That is an annual fee, that $997. That is an annual fee. Thank you for listening. If you have questions, now's the time to ask those questions. A few of them came in, so I will answer those now. And if you do have a question, you can just go ahead and go over to the GoToWebinar control panel, and you can ask the question. So the first question that came in is, will this work in my IRA or 401k? So when you say this, the PeakGold strategy, that Eltek Gold strategy, it will work in any IRA, but it will not work in a 401k. And I say that with like a 90% probability. 90% of 401ks are very restrictive, and they only allow you to buy, the 20 mutual fund ticker symbols that they allow. But the market probability strategy, the one you will get, that absolutely works within 401ks, 403bs, 457s, 529s, superannuations, RRSPs. It works in very restricted accounts, the market probability strategy. So it does work in that. Okay, next question. Next question is, hey RC, you're in Silicon Valley, you're based in the US. Will this work for someone who lives outside the US? Absolutely. This is a global phenomenon. When the markets move into these contraction cycles, it's not a US market thing, it's a global market thing. If you were to pull up price charts of European stock market or Asian stock markets or international stock markets, you would notice that they perform very similar to the US stock market. And in fact, a lot of times because those international stock markets underperform the US stock market, I have clients in Australia where the Eltek Gold strategy has helped them even more because their currency has been hit much harder their stock market has been hit much harder. So it's actually benefited them much better. So where you live in the world actually does not have an impact, because it still comes down to probability. It still comes down to probability. Okay, thanks for that. Yeah, there's a couple questions. Yeah, the $9.97, it is 24 hours and it is an annual fee. So yeah, that is clear with that. Okay, next question. This comes up a lot, and it's coming up here, is about do I have enough money? You know, am I the right person? This is an education. I'm showing you, based on research and evidence and history and probability, what works. So even if you were starting off and you were new and you were 30 years old and you only had $10,000 or $50,000 invested, whether it's your 401k or your IRA or a brokerage account, man, learning the right way to invest at 30 and not at 60 is a lifesaver. But even if you are 60 and you've been doing it yourself and hurting yourself because your conscious brain can only handle 7 things at once, plus or minus 2, and your lesser self has been showing up and hurting things, and it's only in hindsight that your self knew what to do, it's still going to help you, right? This is an education on what really works. So it's not me drip feeding ticker symbols. I will show you what symbols to buy. I'll show you what metal to buy. I'll show you whether you should or should not use leverage. Of course I'll show you that. And you can bring your own symbols to the conversation. This is about what really works. So it's about that education. It's about clarity. It's about finally being aligned with the market and being on the right side of the market. Okay, let's see. More questions about the price. That $9.97, that's actually a locked rate. I will never raise that price on you. Once you get that, that is the rate you will pay, as long as you're a paid up subscriber. Absolutely. Just go to peakgold.org. You get locked into that rate. And what's neat about that is, look, over the last 18 years, when you go in and you look at the investment library, you'll see all the different things I build and I create. I have this new tool in my investment library where I show you how to turn your brokerage account into an account that defers all capital gains. You heard that right. I show you a way to take your brokerage account, literally a brokerage account, it doesn't matter. You take your brokerage account and you defer all your capital gains. So I'm always researching. I'm always looking, how can I help you? You get all of that. I know this is a very different way. I know most people are very used to buying this newsletter for $1,500 and that newsletter for $2,900 and that newsletter for $99 and that newsletter for $4,995. And I understand that that's how the industrial investment complex, specifically the pick of the month newsletter industry, has taught you to be trained. I never liked it when I was learning. I always felt like I was always being upsold something, and I hated that. I built what I wanted. I just wanted a system. I wanted an approach. I wanted a service that could just share with me, this is what's best for your money. No upsells. This is my research. And that's what I built. Hey guys, thank you so much for being in my world. Thank you so much for being a part of this training. Again, peakgold.org. I'll keep that live for 24 hours. You can do that today. Get that going. Especially if you want to get that second opinion and get that set up. We can get that set up, the strategy called Second Opinion, which you'll get that video of me talking to you right after you buy. Thank you so much for being in my world. I appreciate you, and I will speak with you soon. Okay, take care.